Global hedge fund launches plunge. Liquidations rise amid market turmoil. Yes, guys, we just had the worst September in over 20 years, all the way back to September 2002. And a lot of what we're going to talk about is really highlighting that hedge funds are unprepared for what is happening. Literally, as this article says, which we'll talk about, liquidations are on the rise, and the data that we're getting reflected in the S&P 500 in stocks like AMC suggests that hedge funds are on the wrong side of this trade as of recently. So that's what we're going to talk about, all of the data behind AMC, behind a potential short squeeze, everything you guys probably want to know. So hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. And with that being said, let's get straight into it. So this article, that's what we're going to start with. Global hedge fund launches plunge, liquidations rise amid turmoil. New hedge fund launches dove in the second quarter to the lowest level since the start of the 2008 global financial crisis. While fund liquidation spiked, industry data provider HFR said on Friday there were 80 hedge fund launches between April and June, down 57% from the first quarter and the lowest number of new hedge funds since the fourth quarter of 2008, when 58 hedge funds were launched, according to HFR. Another 156 hedge funds closed their doors between April and June, 24% more liquidations than the previous quarter. Overall, the number of hedge funds fell to 9,237 in the second quarter from 9,313 previously. So what's actually happening there is hedge funds are quite literally shutting their doors, going bankrupt, and for a good reason, which we'll talk about here in just a second. Now, it says the data underscores the challenges faced by the hedge fund industry in 2022 amid market turmoil, with 7.7 billion in net outflows in the first half of the year. And this article is very recent, came out on Friday. It says the S&P 500 has plunged 17% so far in 2022, which it's actually down a little bit more than that at the time of recording this video. So hedge funds, they're pretty much going bust, right? It's no surprise. Stocks end month with the worst losing streak in 20 years. You have to go back to 2002 to get a bigger September drop than what we just seen. Now, September historically is a very weak month for the equity markets. It usually is the worst performing month of the year, but not almost 10% down on the S&P 500. Something has definitely snapped. And from what I can tell, hedge funds, they're really not doing so great, right? The estimated short interest of free float sitting at 19.82%. This is in line with what we've seen back in May, back in June, back in July, back in August. It's really no higher than it was before. But the interesting thing is right when the market sell-off actually happened, that's when short interest really took a nosedive from 19.23% on September 2nd, all the way down to September 21st, down to 17.75%. That is tens of billions of dollars that is not being properly hedged for, and that's probably why you're going to see a lot more liquidations here on the near-term horizon. And what those liquidations potentially could mean for stocks like AMC is some of that short interest being covered. And you could also make an argument that a lot of the FTDs, that situation around APE and AMC, might have a lot to do with the market conditions that we have seen over the past month or two, with APE alone having over 145 million FTDs on a single day. That is absolutely ridiculous. A lot of this could be due to lower levels of liquidity, potentially the buying parties not having the necessary capital, or just the shares being unavailable. Now let's take a look at AMC's short interest, because AMC has been performing better than the overall markets. As you can see on Friday, the markets hit a brand new low for 2022, and we actually closed at the lowest, pretty much the lowest point of the day, obviously but especially in 2022, around 357 flat is where the markets did close. So the lowest level of 2022. Whereas if you look at AMC, AMC is most certainly not at the lowest level of 2022. We're still holding up at this line I've had drawn out at $6.88 per share. You're finding a lot of support at that level, which is very indicative of the fact that AMC is outperforming. It could be some of these liquidations, maybe a couple of those hedge funds out of the 150 that closed their doors over the last 3 months had some short positions on AMC. Nonetheless, I don't think that's the biggest thing to focus on here. I think the biggest thing to really take out of this video to focus on is the fact that we've started to see those liquidations, and we're probably going to see something along the same lines as 2008. And why I say that is because hedge funds, they're not properly hedged out for the downside. And this is a very different time with inflation being so high. The Fed's not going to slow down raising rates until unemployment comes up. And that does not seem like it is happening anytime soon. And a lot of these portfolios, they're fixed on what bond yields do, as well as trying to hedge out for the downside. If they're not hedging out for the downside and they don't have a longer term horizon that, hey, this could be a lot of pain for a while, you're going to see some of the bigger guys go bust, and then you're going to see some of the larger short positions on AMC stock start to get covered. And that's also probably a reason why AMC hasn't hit the lows, why we didn't close at a fresh new low for 2022. I imagine with this kind of risk that hedge funds are in right now, it doesn't make a lot of sense to why AMC is not at those levels. Probably because hedge funds are a little bit weary on taking short positions against a highly volatile stock such as AMC. Just my speculation there. But let's talk about this a little bit more. So AMC's short interest of free float sitting at 19.27%, up from 3 months ago at 18.8%. We hit a low of about 17, almost 18% back here in August, and we actually dropped during this whole September sell-off that we have been seeing. Not necessarily indicative, in my opinion, of shorts covering, maybe in a small degree, but I think it's more so showing that people don't want to take on brand new short positions, potentially right around the corner from seeing some of those FTDs actually get covered on. Now, the option activity for AMC on Friday was dismal. Only 3% positive order value, 15 orders totaling $2.04 million. So quite a few options that were placed on AMC, but they were pretty much all to the bearish side. Some market experts are expecting this stock market crash to actually go much lower from here. Morgan Stanley says they are convinced that the S&P will hit an eventual low of between 3,000 and 3,400 points later this year or early next, suggesting it could still plunge another 7 to 18%. Analysts at Goldman Sachs and Bank of America are slightly less bearish, predicting the S&P will fall only to about 3,600, although Goldman also noted the index could tumble another to about 315 on the S&P 500 if the economy falls into a recession. Now, it's very clear the economy is in a recession, and it looks like the Fed is going to break something, and that's actually the article right here on CNBC. Quote, the Fed is breaking things. Here's what Wall Street has on edge as risks rise around the world. The key points: markets enter a perilous new phase in the past week, one in which statistically unusual moves across asset classes are becoming commonplace. Surging volatility in what are supposed to be among the safest fixed income instruments in the world could disrupt the financial system's plumbing, according to Mark Connors, former Credit Suisse global head of risk advisory. That could force the Fed to prop up the treasury market, he said. Doing so will likely force the Fed to put a halt to its quantitative tightening program ahead of schedule. The other worry is that the whipsawing markets will expose the weak hands among asset managers, hedge funds, and other players who may have been over-leveraged or took an unwise risk. Margin calls and forced liquidations could further roil markets. That's exactly what we're talking about here. Forced liquidations. We're talking about margin calls And yes, we're talking about that happening in AMC stock as well. And I think one of the biggest things to point out is that AMC, relatively speaking, is outperforming the broad S&P 500 as of right now. There's a reason for that. There is forced liquidations coming, especially as hedge funds portfolio values continue to drop, because if you guys are unaware, margin, basically how it works when you're leveraging out your portfolio using margin, credit lines, whatever it is. If you got $100 million in your portfolio, well, cool. If 50 million of that is leverage or margin, if your portfolio drops 25% and you're not properly hedged out, well, you're going to get a margin call. You're going to have to cover on your riskiest positions first. That's how it goes. If you had houses, right, and you got all these rental properties with year-long leases or 5-year-long leases, however long it is, and then you got a house you're trying to flip with a bridge loan and you're facing liquidation, you're too over leveraged, you're unable to meet your obligations, what's going to be the first thing that goes? It's going to be that risky bridge loan, right? Just for an example there, I like to do a lot of things in real estate. Don't ever do bridge loans, though. That would be the first thing to go when you're over leveraged. Same thing in the equity markets. The riskiest positions are going to have to be covered first, and there is going to be some degree of collateral behind these AMC positions. So believe it or not, like I said a while ago, the lower the stock market goes, potentially closer you are to seeing those forced share liquidations, to seeing a big event with AMC stock. And it also helps that AMC is going to have a lot of blockbuster movies going to the movie theaters over the next 3 months. Think about Avatar. Avatar 2 is coming out just in December. That was the single highest grossing movie in movie theaters in the history of movies. I think it's over $4 billion was grossed at the box office because of that movie alone. So there's a lot of promising things on the near-term horizon for AMC. And at this point, to be quite honest with you guys, a lot of people would say it's too late to sell anyways. It's your choice to buy more. If you don't believe in the movement, if you don't think AMC is going to squeeze, that's all fine. But the data is here. And like I said a while ago, I still think the most is going to happen end of summer, fall time. You're in fall time. So I do think any time now you could really be prone for a big move, especially if AMC continues to hold up above the $6.88 level. So that's pretty much going to be all for this video. That's what I wanted to express to you guys here in this video, to really break down some of the data. Let me know what you guys think about this down below in the comment section. What are you seeing? Are you looking at something different than I'm seeing? Contrary opinions, let me know that information down below in the comment section. If you guys want to come trade with me live in real time, link down below in the description of this video as well. Get your free stocks with Webull, Moomoo, and Public. Also, link down below in the description. Thank you guys for watching, and I will see you in the next one.